Hello, everyone. Happy Wednesday. This is Simon with AvaTrade, and we're starting our weekly webinar, Interactive Trading Conversations. I want to welcome everyone, especially the new people. I can see some new faces. My name is Simon Friedman, and a few things about myself. I've been trading for over 24 years now. I started as a prop trader in New York City in June of 2000. I don't know if you know about that time when there was a .com era burst like a bubble. Since then, I've been really active in trading. After 11 years of prop trading, I started to mentor and educate others, and now I'm very happy I have a great opportunity to assist our customers at AvaTrade. The agenda of the webinar, I'll explain in few words for new people. The purpose of this webinar is to give you ability to ask specific questions on specific markets. So it's not me presenting things. We have our other webinar, including myself, doing things where we prepare the presentation and we just give you a nice webinar, and maybe there's some space for questions. Here, the podium is yours, and you ask questions about any instruments that you'd like to know about. It could be any of the commodities, any of the currency pairs, individual shares, indices, anything at all that's tradable on AvaTrade. And we'll discuss things. We'll take a look at the chart. We'll try to do some technical analysis. And if I'm aware of any specifics as far as fundamentals for those instruments, I'll be happy to share with you. Okay? All right. Risk warning, you can find the full statement at avatrade.com. And of course, everything we do here is purely educational. We do not suggest any trades. Social media, we have amazing resources at Telegram, X, which used to be Twitter, and YouTube channel. I like to say it's my favorite. There's a lot of information there, and daily it's being updated. New things are being posted. That includes tutorials, a lot of educational material, and webinars. So if you ever missed the webinar, or you can just go and browse through the past webinars, they are available, including this one. It will be recorded and posted to YouTube. So don't stress if you can't make the webinar. You can always watch it in recording. And if you are watching this on YouTube, please click likes if you like it. Feel free to share. Definitely subscribe and click on that bell so you'll be notified when new things are being uploaded. Okay, and again, there's a lot of people that are going to be watching this on YouTube, and they have no ability, of course, to ask questions when they do watch the recording. So you and I will have a great opportunity here to create some material for them, some practical information that can be useful. So please feel free to ask questions. We have up to an hour, and I hope that we're going to fill the full hour with questions. And if we run out of questions, which I hope it won't happen, but if we do, then we're going to wrap it up until next time. Okay. Now, as you wrote here on the question window, confirming that you could see me the same way. You think of a question, you write it on the questions window. I'm going to read it, and then we'll discuss it together. Okay. All right. We're going to start now. I'm going to pull out the trading platform, and we're ready for questions. Again, any instrument, any market that you'd like to know about. For instance, you want to know about gold, oil, natural gas, Tesla, Euro, USD, any instrument that you have questions about, we're here to address that. Okay, so let's start. Again, I hope I don't need to pull anybody's teeth and beg you for questions. Sometimes it does happen. I don't like it. I'd rather spend time sharing with you and trying to give you some practical information instead of begging for questions. Okay, so we start. All you have to do is think of a question, write it in the questions window, and we'll start. Let's go. All right, so long pause. I don't see the questions. Again, it's not complicated. I'm happy you're here, and if you're here, let's make this productive. So please make an effort, type your questions, and we're going to go through it. If we don't have questions, we're just going to have to call it a night, which I don't like. So let's start. We have nice audience here. I know you can hear me, and I would like to see questions. As I always say, I never fake questions. I probably could say that Joe Smith asked this question and pretend that I'm answering it. I would never do that. It's not professional. So I need your help. And okay, here we go. Ashraf is asking, how do trade gold? Okay. Thank you, guys. You're coming with question. I appreciate it. Okay. So, Ashraf, I hope I understand your question. It's a general question about gold, what's happening, right? So we're going to take a quick look at gold. See, as I always like to say, gold has few or wearing few hats. It's being affected by inflation, and also it has a tendency to react as a safe haven when the markets or the equity markets are selling. Thank you, guys. I see the questions are piling up. Please keep going. We're going to go one by one. So, as you could see, technically on gold, we've been sitting around this level, 2,333. We tried to break up, then we did. The very next day, we come back below, and a lot of actions were around this area in a very tight channel. Now today, gold moved higher. It did react to the sell-off in the US dollar, and the 10-year yields. If you're trading gold, sometimes it's good to watch the actions on the bonds. And one of the indications, the 10-year yields, when the yields are going higher, then the gold is feeling some downside pressure. When the yields are moving lower, the gold is gaining some momentum, and it happens a lot that it moves the opposite direction of a dollar. So let's take a quick look. Today, gold is moving higher. So logically, if we're talking about reacting to US dollar, the inflation, take a look. Here we go. Dollar's been selling heavily today. This is the US dollar index. So it's a reversal or the opposite move. Okay, so that's gold. Now, a great question is here, what's going to be next? Technically speaking, let's talk about technicals. If we're closing above, anything could happen. We can pull in again, but let's assume we're closing somewhere around these levels, and if we continue tomorrow and breaking today's high, we might continue higher here technically, and we might retest this level, the top of this candle right here, 2387, and we also might go and confirm the all-time highs. This was the double top here. We had the high in April. We had another one May 20th, and we could move higher here. Now, fundamentally speaking, we have few things coming up. We have NFP numbers. There's non-farm payroll that's happening or being reported the first Friday of the month. So it's this Friday. We have other things that the US Feds are watching in order to make their decisions and directions as far as the interest rate. So logically or potentially, if Feds decide to finally cut the rates, that would move the US dollar lower and possibly have an upside on the gold. And at the same time, the equity markets, which is at the highs, if it could decide to sell, hypothetically, it could also boost the gold because they would start looking where to put the money and safe haven when the risk of trading starts, when the sell-off on the equity markets happening. Sometimes a lot of funds are going into gold. That's the second. And the third one, This recent moves to the highs in April and May, a lot of it was also caused by physical buying of the gold, and China especially was loading on the physical gold, and some other central banks were buying physical gold to offset the inflation. So those are the things. Thank you. Great question. Okay. I hope I pronounced your name right. Opa is asking what to expect in the NFP this week. Okay, great question. And we just said the NFPs are happening on Friday. What to expect? It's not just, you see, the focus is in general on Feds, what the Feds are going to do, but they're paying attention to the whole spectrum of data. So NFP is a strong data for them to watch. Another thing is the state of economy. And the third one is the inflation. They look at the CPI, the PPI numbers, and the personal expenditure numbers, which we had, I think, last week. So logically speaking, for the Feds would be probably favorable for the markets if the employment or less jobs were added than expected. But we also seen when the more jobs were added, the market reacted in a negative way eventually, but then we continue making the highs. So I always say it's good to know about the events on economic calendar. NFP is one of them, but we can't really predict how market will react to it. And you've seen, if you've been trading for a while, you could see that sometimes market initially react, let's say if it moves upside initially, and then it could reverse and move in the opposite direction, or vice versa. We could see a spike to the downside in the market, and at some point there's reversal and strong move to the upside. So again, logically, higher than expected numbers of jobs added could probably mean that the Feds are not really rushing to change the rates. And actually, that's what Powell said yesterday. There was a meeting of European Central Bank, I think in Portugal, and there were other speakers there, including Jerome Powell. And that's what he said, because of the strong employment and what was the second thing he mentioned? Strong employment. It was another aspect. I'm sorry, I don't remember exactly. He said, because of that, we're not really in a rush to take actions as far as the interest cuts. They really want to be careful and wait for more data to come in. And he said, even though the inflation is showing a little bit of a progress to the downside, that's what they're trying to do, to bring it to 2%. We still need more data. We want to be sure before we take any actions. So let's see what NFP will bring and how the market will react to it. So far, we had a few questions. We ready and open for next question, guys? Oh, Mark, thank you for a question. Mark is asking, can gold trading be as a day trading? Absolutely. Any trading could be as a day trading. And I'll explain what day trading is. It's something that you do during the day. You start at some point, and then you finish before the end of the day. So you don't take any positions overnight. That's the whole definition of day trade. Now, within day trading, there are different ways of trading as well. You can buy in the morning, close in the evening or the afternoon. There's also some people are trading a very short time frame. They trade 30-minute, 15-minute charts, 5-minute charts, 1-minute chart, so on. There are also scalpers that are really getting in and out really, really quickly. They're using the volatility of the market and trying to monetize or profit on that. So any instrument, there are few ways you can do day trading. Whatever the frequency is, you can trade once an hour, once in 15 minutes, once in 30 seconds, whatever works for you. So that's day trading. There's swing trading that you can buy and hold it a day to a few days. There's also midterm that you use, I don't know, for up to a few weeks maybe. And there's also investing, a long-term investing. The people just buy and hold. So I believe any instrument could be tradable, either way you like. Some people prefer day trading, so they don't take a risk. They like to sleep well. And I share with you, like I said in the beginning, I started as a prop trader. We were only allowed to do day trading. We couldn't take any position. Prop trading, when you work, I was working at few within 11 years with few prop firms on Wall Street. So the deal is they give you the money, you trade, and they also control your risk. So one of the risk controlling tool was that you don't take any trades overnight, and you out before the bell rings at 4 p.m. New York time. And that's what I did for 11 years. And after that, I started to trade differently. Also, day trading, also a short-term investment, midterm. I don't do a lot of long-term investment. I personally don't do, but people do it. People like to do whatever fits their desire, their schedule, their lifestyle, and so on. So, absolutely, great question. You can trade, I think, anything in any style that you like to. Okay, Mark is continuing. Guys, while I'm answering these questions, which are not really about the instruments, but as I don't have any others, so I'm happy to answer these questions, but try to build up some questions about specific markets, okay? So Mark is asking, are any fees for keeping a position overnight to the next business day? Absolutely. You trading on leverage, so you're trading on borrowed money. So it depends where you are and what your leverage is as far as the regulations. You buy a position or you sell a position short with the funds that you have on the account. So you're borrowing the money, and there is something they call overnight swaps. So you can find it in the trading info for each instrument. There's a different percentage. It depends on the interest rate percentage and other things, the size of your position, and it's being charged daily. Also, some instruments you have triple swaps on Wednesday, some you have on Friday. So you have to also know that sometimes you see your swaps being added on each day, and then some days you don't see it's being added because there's a 3-day swap either on Wednesday or Friday. So over the weekend, there are no charges there. Right? If you have questions like this, you can always ask your account manager, and they'll be happy to explain. You can find it on the website. You can find it on the platform. All the information is transparent, and it's a good idea for you to know ahead of time, so you'll be prepared and know, how much it costs you to hold overnight positions. Okay, great question, guys. I don't see any specific questions. We've been up for almost half an hour. I'm going to give it another 10 seconds. I hope you'll come up with specific questions on specific markets, and I'll be happy to continue. Okay, so let's do it. I think I missed a question from Felicia. I apologize. And she's asking, what's the prediction of crude oil or Brent oil price? Okay, so we'll take a look at oil. We're going to take a look at crude oil as it's more commonly traded. Again, we can't really predict things. We can only analyze and try to bring some logic to it. Okay, so crude oil right here. Again, it's important to zoom out a little bit just to see the big picture. Okay, so back in 2021, we moved higher here. We hit the highs of 130. There was the move, a lot of it to do with the war in Ukraine, fear of possible a lack of supply. Then we moved lower in April 2022. Then we tried to do another high here. We made a lower high. The peak was on the week of June 12th of 2022. And then the sell-off started. right? A lot of it to do with China. If you look, this was, what was it? June 2022. Let's take a look at China. June 2022. Here we go. See, June 2022. Chinese index was really diving the economy. They still are in trouble, but this was a big dive here. There were other aspects as well, and oil went lower. Then it was trying to build some support around 71. Then we broke below, above. Then we had a nice move to the upside, which broke the previous high, and that started a year ago, June of 2023. We came all the way to the highs of $95. Then we came to confirm this 71, 72 level. Then we made another move to the upside, another lower high comparing to the previous one. Okay, but what's here, this is the weekly chart, right? Important to understand. Weekly chart that each candle represents one week. And then we had a move down. We almost came to that 71.80 area, and then we bounced. So it looks like we're trying to establish the reversal, something on the weekly chart, right? Making a higher low. So if oil continues higher here and breaking this previous high, we could be turning to the strong move to the upside. That's the weekly chart, right? A little bit of zooming out, which is important. And I like to give an example that when you come to a museum and you try to see the painting, and if you just come really, really close to it, you can't really see and understand the whole painting. You have to step out and see it as a whole. And then if you'd like to see details, you zoom in, you come closer, and you see the technique of the artist and so on. The same thing in trading. That's why you try to see the higher time frame and then zoom into the smaller one to look maybe for better entries or to analyze it specifically. So on the daily chart here, you can see it clearly that we kind of having a double tap here against this attempt on end of April. This is a daily chart now, so each candle represents a day. So take a look. Here we had the spike on April 26th. We had the high of 84.44. And yesterday, we went almost to that level, 84.36. We were short a few cents to that level, and then we rejected that. So now we know that the resistance is holding so far. And if oil, which it could be, will try to break that thing again, what we want to see in order to move higher, we want to see a closing about this level and then a build up that we're switching from resistance to support and possible continuation to the upside. If we will try and fail to break and we're going to start to build below that line, below that approximate 84 mark, we might build a strong resistance and then eventually move lower. That's technically. Now, fundamentally, this recent move to the upside is being caused by two major fundamental reasons. One, as you know, unfortunately, there's a war going on in the Middle East, and there's, according to some sources, they said that the war could move into the north of Israel with Lebanon, and everybody is kind of scared of that. It's not a good thing. None of the wars are good. We know that. And everybody's afraid that they can really create a big issue in the whole region of Middle East, which is a big source of oil. So that could be interrupting the supply. So that's one reason. Second reason, in the recent days, we had this huge hurricane building up in the US and it's moving towards the Gulf of Mexico. And that's also a big reason. I just found out about it yesterday, actually, by reading it. And that's also a big reason that both of those reasons are kind of a fear of a supply being cut or being lowered. So far, it's been moving oil higher. Okay. Now, again, we have to take a look at China. China has been selling here. Why am I saying China? China is a big user of oil and they don't produce it, so they buy all the oil. again, it's very tricky because I'm sure they're also buying it from Russia, much cheaper, but they're still buying a regular oil crude. So those are the situations with oil. So in any event, we have to watch this 84 approximate level for either breakout or continuation of being a resistance there. All right. I hope that makes sense. Okay. I don't see any other questions, guys. We still have time. We up a little bit more within half an hour. Do we have any questions here? Going once, going twice. No more questions. Okay. Thank you. You've been a great audience. I hope we had. Okay. Opa is asking. Great. All right. So that was a fail goodbye. I'm happy. You're asking. I see you only using moving averages on your chart. Uh, uh, this is just. It doesn't mean I'm using them or I'm not using them. These are the common moving averages that you could see in the classical technical analysis. So here specifically on this chart, this is daily chart. So you have a daily moving average here. So the red one is 200 days moving average. The green one is 50, and the yellow is 100. So this is the most common moving averages. Some people like to use different things, different indicators, and so on. It's all individual, but to answer your question, it's 200, 50, and 100 moving average here. The continuation, Upa is asking, does it work better with you since there's so many tools? I tell you the truth. I'm just thinking how to answer the question. I'll give you a funny example, which is a true example. Um, I remember once I met with a trader and I was consulting him. I was mentoring him, and he came with a laptop. And he opened a laptop with the MT4 on it, and he was trying to ask me questions or explain to me what he does. And all I saw there, it was the whole field here. This is the naked chart, right? There's nothing here, just one. His chart, you couldn't see the price. The whole field was full of, I don't know, he probably put all the indicators available there on that thing. So I asked him, how do you see the price? How can you really see the price? And he could answer that. So going back to me personally, again, this is my personal experience. Through the years, there were different cycles or different stages of my trading. First of all, when I started to do prop trading, we were only trading Nasdaq at that time, and a year later, I also started to trade New York Stock Exchange stocks. And technology was a little bit less advanced back then. So in the year 2000, when I came to trade, we had each of us had one monitor. One monitor. We usually had the three orders, order windows, and time in sales and other things. Not really working with charts. We used to work with level 2. Each window had level 2. We work with numbers, and between us, I remember it was a guy by the name Pete was sitting next to me, and between us was another monitor. They had a chart of S&Ps, and it was a line chart, right? Something like this. This was the chart that we saw. That's as far as technical analysis we had. So we really we traded the tape, and that was really amazing because you get to really dance with the market and really feel it. So that's what we had. We had the chart. Let me bring the S&Ps. That was I appreciate the question. It took me back in time. So this is the chart we saw. We just saw a general direction of the market. Okay, and then we traded individual stocks. Now later on, when I started to trade other things, I started to use technical analysis, learn about the candles, learn about the moving averages, Bollinger Bands, RSI, stochastics. There's so many things. I used to test and run different strategies with the combination of things and so on. I went through a lot of things and so on. And the thing is, the indicators are great, and some of them work more, some less. But you need to understand, in general, what the market is doing, and then you can combine it with indicators. Because if you just blindly use the indicators, sometimes it works, sometimes it doesn't, and that's the beauty of the market as well. So it's important, and I realize that it's good to have indicators, but it's good to have ideas, and also the levels of support and resistance are really working if you combine it with some indicators that you're using. For instance, take a look. Just give this last example that we took oil. Take a look. Oil. Last time I had a hard time breaking this level. That was April 26, 28th, right? Take a look. The moment we came to that level, it went higher, but then it came right back. So this is important to know the support and resistance, to have an idea where it could be a possible entry to buy or sell and so on. And then, of course, you can use any indicators, and if it works for you, it's beautiful. And you can combine them, change the settings and so on. There are different things, okay? Okay, Mark is asking, let me ask your opinion. Do you think the stock market is currently overheated? My opinion, definitely, but who cares about my opinion? You could read a lot of articles, especially recently, and a lot of analysts are saying. I think I was doing the market review today, and this analyst from Citibank. That was the latest thing. If you take a look on the internet, find the sources, that different sources on the market analysis. So he's expecting that it's going to be a pullback during the summer, but he also, on the opposite side, he still holds the target for S&Ps at 5,600. So some also paying attention to Nvidia stock as the one that's really pushing the markets, especially Nasdaq and S&Ps as well. So Nvidia, they're saying it's been running out of steam. Some analysts are saying that at least for a short period of time, they're looking for some corrections. Others are saying it's just going to go straight up. So there's always opposite opinions, and that's the beauty of the market. Otherwise, it wouldn't be. It would just buyers on the market, no sellers. It wouldn't be a market there, right? So there's always two camps. So if you take a look at Nvidia, we just made this high on the 20th of June, and then we came to retest the 117, 118, and then we are trying to move higher from here. Today's a strong day for Nvidia, right? So if you take any of the major stocks, they're all at the highest. This is Microsoft, okay? It just moving higher at all-time highs. Apple is a little bit behind. Let me bring it back to MT4. Apple is a little bit behind, but still strong. So most of the major stocks, they used to have a FANG group of stocks. Now they call them Magnificent Seven, right? So the group of biggest stocks, and the three biggest of them is Microsoft, Apple, and Nvidia, right? They're over $3 trillion the market cap, right? So take a look. If usually the traders look S&P 500 as a kind of a major indication the market. Take a look. Today we are making all-time highs again. So is it overheated? Definitely. That's why we had for a few days here, we had a little bit of stagnation, but take a look, we're moving higher. So you and I, we could think it's overheated, but market is doing whatever he wants to do, or it wants to do. So that's the thing. You have to be flexible, even though if you have an opinion, if you think market is overheated, it's okay to think that way, but to be stubborn and saying, I'm going to sell the whole market because I think it's overheated. Sometimes it's a dangerous thing to do, right? So you need to feel the pulse of the market, and you need to trade what you see. Actually, one of my friends, Alex, we used to trade together on Wall Street. One of his sayings is really practical, very simple. He said, "Trade what you see, not what you think." Okay. So far, market is doing higher. So if you and I think if it's overheated, but it's going higher, maybe we could adjust our thinking, or maybe just wait till the market shows us that we're right? Not to be stubborn, right? Great question. Mark is asking how it could affect. Okay, 1 second. Let me ask your opinion. Do you think the stock market is currently overheated? And then you continue. How it could affect the beginner in trading? I don't know. Didn't understand your question, right, Mark? I'm sorry, but I think I answered the first part of it. Opa is asking, out of interest, how is the buzzword at all work with trading? Opa, I also don't understand your question. If you can simplify it and ask it again, I'll be happy to answer. Okay. All right, guys. We still have time. We're doing great. Thank you for not letting me close the webinar. And again, it's a big lesson to all of us. Just keep on coming up with questions, and then we'll continue to complete an hour. It would be very, very nice. All right. I don't see any questions. All right, guys. I wish everyone lots of success in trading. If you have any specific questions, you can talk to your account managers. You can access our support if you need any help. We're always happy to help. Please don't forget about the social media channels. We're offering a lot of amazing information there. If you are watching this on YouTube, please feel free to click the likes, share, subscribe, click the bell, and also write your feedback. I'm always trying to improve things and make it more practical and more useful. So your feedback is very, very important. Thank you very much. Have a pleasant evening. All the best.